Have you ever felt unsure about when is the right time to enter the market? Worry no more, because today I'm going to share a super accurate pullback strategy using only 2 indicators. Yes, just 2 simple indicators from Tradingview that can transform the way you trade. Hello everyone, welcome to Forex Strategy Explorer. In this video, I'm going to guide you through a pullback strategy that is very easy to apply. It doesn't matter if you're a beginner or an experienced trader, this strategy is suitable for everyone. And what's even more exciting, you don't need to be a technical expert to start using it. Even though we'll focus on Forex trading in this video, this pullback strategy can be applied to almost any asset, from gold or XAU/USD, crypto, stocks, and much more. So make sure to watch until the end so you don't miss any important tips that will boost your trading accuracy. Don't forget to support us with a like and subscribe to keep getting the latest trading strategies. Now, let's get started. To use this pullback trading strategy, you can start by going to Tradingview. Then, go to the Search Indicator tab. In the search bar, type Pullback Trading Tool Alt R1. Next, select the Pullback Trading Tool Alt R1 indicator by just Uncle L. After that, adjust the settings for the Pullback Trading Tool Alt. In the Input tab, just leave the settings at their default values. Then, you can move to the Style tab. In the Style tab, uncheck all the boxes, leaving only the Fast Anchored MA, Medium Anchored MA, and Anchored MA fill. After that, customize the color of the Fast Anchored MA and Medium Anchored MA according to your preferences. Once done, just click OK to confirm the changes. This Pullback Trading Tool Alt indicator will be used as a trend guide, as well as an early detector for pullbacks in the market. If you follow the settings I've shown, when the medium anchored lines are below, this is a sign of a bullish trend. In this situation, your main focus should be finding the best points to place buy orders. On the other hand, if the medium anchored lines are above, this is a sign of a bearish trend. In this case, your main focus should be finding the best points to place sell orders. Before you place any orders, you need to ensure that a valid pullback has occurred. To confirm that it's a valid pullback, you need to wait until the price candlestick retests the pullback trading tool area. Then, make sure that during the pullback, the trend does not change. Now, let's add the second indicator, which will be used as a guide for placing entries in the market. Go to the Search Indicator tab and type stochastic. Then, just select the default stochastic indicator from Tradingview. After that, adjust the settings of the stochastic indicator. In the Input tab, change the %K length to 24. Then, set the %K smoothing to 3. Also, set the %D smoothing to 3. Now, go to the Style tab. In the Style tab, uncheck the middle band and background options. After that, set the upper band level to 95 and the lower band level to 5. Once done, click OK to confirm the changes. Before it can be used, add 2 horizontal lines to the stochastic indicator. First, insert the first horizontal line. Set the level of the first horizontal line to 75. Then, insert the second horizontal line. Set the level of the second horizontal line to 25. For the color of the lines, feel free to adjust them according to your personal preferences. this stochastic indicator will be used as a guide for placing entries in the market. If the stochastic signal line enters the area between levels 6 and 24, this means the signal line has entered the buy zone. You can wait until the stochastic signal line crosses back above the 25 level before placing a buy entry. Make sure that during this process, the stochastic signal line does not fall below the 5 level. If the signal line crosses below the 5 level, it is an invalid buy signal. On the other hand, if the stochastic signal line enters the area between levels 76 and 94, this means the signal line has entered the sell zone. You can wait until the stochastic signal line crosses back below the 75 level before placing a sell entry. Make sure that during this process, the stochastic signal line does not rise above the 95 level. If the signal line crosses above the 95 level, it is an invalid sell signal. Now, to explain this more clearly, let's discuss how to place an order using this pullback trading strategy. How to place a sell order. If the medium anchored line is above, this indicates a bearish trend. In this situation, your main focus is finding the best point to place a sell order. Wait for the price candlestick to retest the pullback trading tool area. Wait until the stochastic signal line enters the sell zone. Then, wait for the stochastic signal line to cross or close below level 75. Confirm that the candlestick formed is a bearish candlestick. If all conditions are met, you can place a sell order after the bearish candlestick has closed. Set your stop loss at the most recent swing high. Use a take-profit target with a risk-reward ratio of 1 to 1.5. How to place a buy order. If the medium anchored line is below, this indicates a bullish trend. In this situation, your main focus is finding the best point to place a buy order. Wait for the price candlestick to retest the pullback trading tool area. Wait until the stochastic signal line enters the buy zone. Then, wait for the stochastic signal line to cross or close above level 25. Confirm that the candlestick formed is a bullish candlestick. If all conditions are met, you can place a buy order after the bullish candlestick has closed. Set your stop loss at the most recent swing low. Use a take-profit target with a risk-reward ratio of 1 to 1.5. Always maintain your money management and trading psychology. Click like and subscribe if you enjoyed this video. That's all for this discussion, and see you in the next video.